Hello, everyone. Thank you for joining us on this Wednesday, and welcome to this educational presentation where today I'd like to talk to you about two edges that will help you survive virtually any market. Doesn't matter if you're trading, let's say, crypto, doesn't matter if you're trading currency pairs, futures, or the stock market. And in fact, it doesn't matter which time frame. These edges are things that I've learned, I learned about over 4 decades ago when I was struggling as a trader, and they've really helped sustain my trading, and I use them all the time in my trading today. Now, let me look, or I should say, let us look at this older example in KLAC here, okay? Now, the way most traders, myself included when I first started out, the way we would view a chart like this, where we'd say, well, you know, I went to that website where they're all about support and resistance, and they say there's major resistance here, so I'm going to wait for a breakout before I do anything, or maybe wait for the earnings to come out, or wait for some announcement before I actually trade. But with the two edges I'm going to share with you today, the first edge actually generated two signals prior to that so-called resistance. For example, there was a sell and a buy, all right? Now, which one do we take? Now, obviously, the sell has not worked out that well, but for all intents and purposes, it could be going straight down in the next week, or perhaps this one's going to go straight up. So the second method that I'll be talking about today confirmed which signal to take, and that actually discarded the sell signal. So all we're left to do is take the buy one if we wanted to, and we could have potentially made 64 points in the next week. So this is what we're going to be talking about today, two edges that will help you survive virtually any market, whether it's going up, whether it's going down, regardless of time frame. And on top of that, you'll be able to execute and apply these two edges on our platform, the PTS Primo Charting Platform, that actually teaches you how to trade. So welcome once again. My name is Stephen Primo. I am the president and founder of Specialist Trading. I've been trading now for 46 years, if you can believe it. I started my trading on the career, I started my trading career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. I basically made markets in roughly about 46 stocks. So if you wanted to buy or sell a particular equity like IBM, US Airways Management, you had to go up to the trader who made a market in that, who specialized in making a market, and that's what I did. Now, when I first started trading as a specialist, I know a lot of traders would say, well, that's simple. That's why you're able to have this longevity, because you had access to all this information and you were able to trade with a large amount of money. Yeah, but even with those two advantages, I still couldn't make a dime for nearly 2 years. Now, my mentors taught me the same things I will be teaching you today, and they really have sustained my trading, these edges and the things that I teach in my courses. So that's what I want to do today, is to just fill you in on what has really helped me, and hopefully it will be able to turn your trading around as well. Now, before we begin, we're required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these two edges, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are first and foremost an educational company only, all examples are strictly for educational purposes only. Now, if you haven't done so already, please feel free to follow us on Twitter. There's our handle right there. I would recommend copying that down. I post a lot of great information on a daily basis, bits of financial wisdom, also snapshots of current signals that our strategies have generated. So there's lots of great free trading education on a daily basis. So please feel free to follow us on Twitter. Now remember, as I just said a few moments ago, we are first and foremost an educational company. So how does that differ from other webinars you've gone to? Well, firstly, an educator does not predict what the market's going to do, does not tell you what he thinks the market's going to do, does not force feed you signals to take, does not tell you what you should buy and what you should sell, because that would be similar to, let's say, someone wanting or to learn how to play golf, and then the instructor basically just played golf for you. All right, what would you learn if you had him do that? Or what if you wanted to learn how to skydive, and they said, well, just sit here on the ground and I'll skydive for you. But that's the way traders are taught to trade. Basically, we take ourselves out of the game and we say, well, listen, you just tell me what to do and I'll do it for you. Okay. And that's why most traders fail. So as a true educator, our goal is not to force feed you signals or tell you what to buy or sell. Our goal is simply to teach you how to trade with the specialist edge. As I said earlier, when I was struggling some 46 years ago, my mentors taught me the same way, the same style, And even though I didn't like it at the time, I said the same thing. I said, why can't you just give me signals or tell me what you're buying or selling? And they said, because eventually you're going to have to find your own way and see what works for you. But the good news is that all these tips, techniques, and strategies can easily be applied to meet your needs. With just a few minor alterations, you can make it fit your trading persona. So that's what we do as a mentor. We teach you how to trade with the specialist edge. Happy to say now that we have students in over 115 countries and in every state in the United States. Okay. Now, before we begin, a few announcements. Remember, if you have questions, please wait till the end of class to ask them. We don't want to stop. I have, I think, close to 150 slides here today, so I don't want to stop for every slide. Also, we are recording this, so if you have to leave early or if you're having technical issues, many times it's just your computer or maybe your internet connection, just turn it off and then back on again. And if it's still having difficulty, don't worry, you'll each be sent a link with this recording. You can watch it whenever you'd like, okay? So please remember to ask the questions at the end. I love your questions. And let's begin today's educational presentation. All right, so let's get right into it. Remember, what my mentors taught me is the same thing I teach my students. And here's what they said. They said, the market you're trading, regardless of time frame or direction, tells you everything you need to know. Now, when I first heard this from my mentors, I said, wait a minute, I've always been taught that some guy on TV who's to be a trading guru, supposed to be, he tells me what, everything I need to know. Or I always thought the earnings were supposed to tell me everything I need to know about the company of the stock. Or I always thought the economic news, the jobless claims, or things like that were supposed to tell me everything I knew. And they said, no, really, that's just really useless. It's useless information because it's too subjective. The chart in front of you, the market you're trading, what you're looking at, tells you just about everything you need to know. Unfortunately, we're not taught ever to look and listen to that. We're always taught to, as I said, listen to an outside source, like some trading guru who has a signal service, like some economic news, like some earnings report. But we're never taught to look and see what's happening right in front of us. So here's what we're going to be talking about. 2 methods to help you listen to the market, because they're basically all being defined by market behavior and no outside sources like fundamental news or earnings or what some guy supposedly who knows what he's talking about is telling you. No, these are 2 methods that are based on market behavior, and they will help you listen to the market. All right, the first method is strategy number 4. You've heard me talk about this before. This is actually the very first strategy I was taught by my mentors some 46 years ago, and I continue to apply it today in my personal trading. So some of the highlights of this, it's a pattern recognition strategy, okay? We're looking for a specific pattern that repeats itself over and over again in any market and in any time frame. Now, it's designed for traders looking to catch momentum. Now, the beauty of strategy 4 is oftentimes it will signal that a momentum change is just about to happen before it looks or appears as if anything is happening. So you'll get a sideways market where it doesn't look as if there's any momentum, and it will generate some type of a signal. Now, since it's a pattern recognition strategy, it only uses one indicator. I'm going to share with you what that is in just a few minutes. Okay, so let's look at some examples of strategy number 4 in action. This is our first of 2 edges I'll be sharing with you today. All right, here's an older chart in VRSN. All right, once again, there's absolutely no momentum here. The stock is basically going sideways, kind of in a range market, right? Goes up, goes down, goes up, goes down. But first thing we do is apply the 50-period moving average. That's the only indicator we're using with strategy number 4. And we call this our buy-sell line. Because if price is above the way it is right here, we're only looking for buy setups. We're only looking for that pattern for a buy signal. Now, conversely, if price were below, well, then we'd be looking for that pattern for a sell signal. But since price is above, we're only looking for the buy option, okay? Now, right here, as you can see, a buy signal was generated. This met the pattern, okay? So we are above the 50-period moving average. A buy signal has been generated. There's absolutely no momentum. We're just going sideways. And look what happens. All of a sudden, the stock took off 20 points in the next week. Here's another example in PINS, okay? Kind of a lot of whipsaw going back and forth, but let's say you go to that website, or maybe you bought that $10,000 course, which talks about support and resistance, and they say that this is major, major support. because this is where all the banks are buying. This is where all the institutions are buying. That's why it can't go any lower. So you got to buy it too, right? Okay. Once again, this is the way we're always trained to listen, not to the market itself, not to the chart itself, but to an outside source, like institutions, like what some guy's saying in a chat room. But what's the first thing we do with strategy number 4? Well, we apply the 50-period moving average. Now we ask ourselves, where is price in relation to that 50-period moving average? Obviously, it's below. So we're not going to be a buyer or even consider buying this at all. I don't care what some guy's saying in the chat room. If price is below the 50-period moving average, the odds are in your favor that it wants to go lower. Okay? So let's look for that pattern. And guess what? We found a pattern right here. All right? Based off these bars, it's a sell signal. So everyone else was buying based off this so-called institutional support. You decided to sell. Maybe you were long this and you said, hey, I'm going to use this as an exit signal. Not necessarily going to go short a $30 stock, but I'll just exit it. And look what happened. The stock fell 10 points. And ultimately, some bad announcement came out right here, which caused it to gap lower. It's funny how weeks before we knew to exit prior to that. Okay. And the good news about strategy number 4 is that this pattern repeats itself over and over again. So if you missed that very first setup, well, guess what? Look at all the other ones that were generated along the way. Now, before you go out and say, hey, listen, I'm sold. I want to purchase strategy 4. This is the greatest thing in the world. Remember, nothing works 100% of the time. That's just the way life is, okay? Nothing works. Whether you're an athlete, whether you're an entertainer, relationships, nothing works all of the time. For example, let's look at this sell signal in SIX, okay? Let's say you're brand new to strategy 4. You're all excited. You get your first sell signal, so you decide to either buy the puts or maybe you sell short the stock, and then this happens. You say to yourself, wow, this isn't working out too well, but we're still below the 50-period moving average, okay? So obviously the price is in my favor of going lower, and then guess what? We have another sell signal. So you do what we call is doubling up. You decide to sell some more to go short, okay? And then this happens. So at this point, you say to yourself, well, listen, we're now above the 50-period moving average, which means I shouldn't be looking to go short. And I just got stopped out. I lost a lot of money. So I'm just going to get out of this one. I guess rack that up to being a loss. All right. So you wait a week or two. And then guess what? We have 2 buy signals. Even though they crossed below, they close above, which is all you need. You need for price to close above the 50-period moving average. And they're both double buy signals. So you say to yourself, wow, I'm going to buy these. I'm going to spend a lot of extra money, and I'm going to make all the money I lost back on the sells. So you jump onto these trades, and then this happens, okay? So at this point, before you want to refund or you're ready to throw your computer out the window, this brings us to the second method, and we call that the PET-D. This is our confirmation tool. Once again, another very high probability edge that I first learned on the trading floor of the stock exchange, okay? So if you're not familiar, I've talked a lot about the PET-D in the past, but if you're not familiar, let me share with you what it does, all right? Let's look at this older chart in ATER. Obviously, we're going lower, okay? Now, at this time, most traders would say, oh, wow, I'm holding this for the long haul, but then they say to themselves, wow, this stock was at 15, 16, and now it's just like lost half its value. So I'm getting out, I'm exiting, and then this happens, right? Look familiar? How could the PET-D have helped us? Well, the PET-D is a unique color bar tool. What it does is it colors the bars to tell you the direction, okay? What you would do here is click on PET-D Fast on our platform. This is how we make it so simple. And the colors either will turn red or green. Now, red for a short-term downtrend, as we see here. Green for a short-term uptrend. Now, the PET-D is not a predictive tool. It doesn't tell you how high something will go. It doesn't tell you how low something will go. All it does is a very sensitive color bar tool that tells you the direction that you should be trading, as it says here. And once you know the direction, well, you can confirm if your strategy is in sync with that direction. For example, we knew, because we had consecutive red bars right here well in advance, that we wanted to go lower. And at this point, because we had consecutive green bars, we knew that it wanted to go higher, okay? Unfortunately, traders usually do the opposite. At this point, this is where we start to buy, thinking it's really oversold, and then it gets to the point where you can't take it anymore, so you sell, and that's just about the point where you should be buying. Now, when we combine this combination of these two edges, these two methods, strategy 4 with the PET D, we get a combination that we call the dynamic duo. We call it dynamic duo because it is extremely dynamic, and our students around the world is one of our most popular strategy methods because it really helps them take their consistency to the next level. Now, let me share with you what the rules are for trading with the dynamic duo. Now, let's say you get a strategy number 4 buy signal. We're only going to trade strategy number 4 buy signals that are colored green by the PET D. So on our platform, when a strategy 4 buy signal is generated, you'll get a green arrow. The bar above that arrow must be colored or outlined green. All right, that's the requirement. Now, conversely, let's say you get a sell signal. All right, we're only going to trade strategy number 4 sell signals where the bars are colored red by the PET D. So if you get a sell signal, you're going to get a red arrow. Now, the bar directly below that red arrow should be colored or outlined red. If it is not, then you don't take the trade. Why are we taking these trades? Because we have a higher level of consistency. We've just ramped up our level of consistency tremendously. So now we have a double or dynamic duo edge. Remember, you can only apply this dynamic duo on the PTS Primo Charting Platform with this ease by one click here, one click there, and you'll see it appear instantly. We designed it that way to make it simple. All right, let's look at a chart here in APA. All right, stock's going down, then it goes up, then it goes down and sideways. All right, if we apply strategy number 4, we click it on our platform right here. In the drop-down menu, we want to click on signal arrows, and we'll see a number of arrows appear. These are all strategy number 4 signals, all right? The first part of the method. Now, some work, like this one doesn't work, but then this one does work. So how do we filter out the good ones from the bad ones with high level of consistency? Well, we apply the PET D. So once again, is it simple as on our platform, clicking on the PET D, and the colors will automatically change. Okay, so let's go over the rules again. If we get a sell signal, we'll see that red arrow. The bar directly below it must be colored red in order for us to take it. So what color is this bar? It is red. Now, I know a lot of students have trouble. They say, but Steve, the bars before it are green and the one after it is green. All we're concerned about is the bar directly below the arrow. So this is a valid dynamic duo setup. You could have taken this trade and made a quick 5 points. Not a bad little trade. Now we have the next setup right here, okay? This is a sell signal, all right? But what color is the bar directly below? The bar is green, colored green by the PET D. So the PET D is not confirming this, all right? So we're not going to take this trade, and we saved ourselves a lot of money because look what would have happened. We would have lost money. Now, the third instance, we have a buy signal now. We have a green up arrow. In order for us to take this, the bar above needs to be colored or outlined green. So what color is it? Well, if you can see it there, it's outlined green. So that's telling us it is okay to take that trade, and we all could see what happened. You could have potentially made 5 points here and then potentially made 8 points here because these are valid dynamic duo setups. Now, as it started to wane, the trend started to wane, we're coming lower, and we have a number of buy signals. 1, 2, 3, 4, 5, okay? So nothing really has happened yet. We're just kind of going sideways. But should we have taken these signals? Remember, the requirements state for a dynamic duo trade that in order for us to buy, the bar above must be colored or outlined green. And what are the colors of the bars above each and every one of these green arrows? They're all red. So we're not going to take any of these trades. And that would have been very wise because look what happened right after that. Okay, some of the best trades are the ones you never take. So as opposed to having a few good trades marked by a number of losses, we actually would have had potentially made 13 points because that's the beauty of the dynamic duo. You have a high probability trading method along with the filtering method. All right, so now that you know the process, now that you know how to generate these signals on our platform and what to look for, let's look at some recent dynamic duo signals that go back about a month or two, okay? Some in the last week. All right, here's an example in FISV. Once again, absolutely nothing to see here, right? We're basically just going sideways. And if we click on strategy 4, in the drop-down menu, click on signal arrow, we see that even though we're going sideways, we have two buy signals right here. All right. And remember, strategy 4 is based off of capturing momentum. There's absolutely no momentum here. So that's the beauty of this, because it's actually, with this pattern, sensing that momentum is about to come in on the upside, whereas no one else is seeing any of this. All right. But it's not good enough just to take the strategy 4 signal. We want to confirm it. We confirm it with the PET D, clicking on the PET D on our platform, and the colors automatically change. And guess what? All of the bars are colored or outlined green. So the market, not some guy in a chat room, not some guy on TV, not even some guy in a webinar, the market in front of you is telling you it wants to go higher. You see how we're never trained to listen to this? We're always trained to listen to an outside source. But as a trader, you have to learn how to listen to the market, because that really tells you in advance just about 95% of the time. So we had two buy signals generated here, and look what happened. It shot up 12 points in the next week, okay? Really simple. How about Meta? All right, this is going back to just about 3 weeks ago. Once again, stocks going up, going back down, going back up, kind of a whipsaw sideways market. But because of strategy number 4, we click on signal arrows. It's telling us once again that it wants to go higher. There are two prominent buy signals and buy setups here, okay? But that's not enough. We want to confirm it for a high probability trade. So we apply the PET D, and it automatically changes the colors. And once again, they're all green. Now, a lot of people have difficulty with the PET D at times because they say, well, Steve, I don't understand. This bar is green, but it was a closing down day. Yes, what it means is the bar closed down on that day, but the PET D is still telling us that the trend is up. So therefore, it's not coloring it red. So for all intents and purposes, that's a buying opportunity. That's not a selling opportunity when a bar closes down. So just think of it this way, if you're having some confusion about this. And I've said this before, this analogy, but every time in the summer, okay, every time in the middle of July or August, it doesn't matter where you live, what part of the country or what part of the world for that matter, you'll have this temperature aberration where it can be in the 90s or even hundreds, and then one day it's in the 60s or 70s, right? And you say to yourself, wow, this is great. All of a sudden in one day, we dropped about 20 or 30 degrees. Now, does this mean that summer is over, officially over? No, because usually what happens the next week, it's right back up to 90, 100 degrees, right? It's just an aberration. We're still in a strong uptrend of summer. This is just a 1 or 2 day low temperature day. It's the same way with these days right here. We have a couple of days that are down. Is this telling us we're in a downtrend? No, because the PET D still coloring them green and we went back up. Another down day. Oh, is this telling us we're in a downtrend? No, because it's colored green and we have now two buy signals. So these are high probability setups, dynamic duo setups. And look what happened. 22 points coming into just last week. Let's look at ADSK, all right? This is in March, just last month. Stock has been going up, and then we have a sell signal. In order to validate it, we apply the PET D. And not only is the bar below the arrow red, all of these bars have been red. This is the same concept here. We have 1, 2, 3 up days, and they're all colored red. So what is the market telling me? It's telling me don't get confused and don't get caught thinking that we're going higher, because all this is like a warm 80-degree day in the middle of winter. It's not going to last long. And just like that, we see that the stock didn't last long either. All right. So what would you rather be, a buyer or a seller? The market was telling you not to get sucked into that little rally because all the bars were colored red. This is what we mean when we say the market tells you everything you need to know. There's no reason to worry about outside noise. I did 46 years ago, and I always say that's why I lost so much money, because it didn't make any sense. Great news would come out, I'd buy the stock, and it would go straight down. That's all happened to you before, I know it has. Or terrible news would come out, and the market would go straight up. There's not a lot of consistency in that, but there's more consistency once you learn how to listen to the market. All right, here's an example in Airbnb, going kind of sideways here, but a buy signal was generated. We apply the PET D, and even though the bar before was red, all we're concerned about is the bar above the arrow, and it's outlined green. So that's a valid dynamic duo setup. This was on the a couple of months ago, 13th, and 28 points in 3 days. Not a bad little trade, right? Let's look at CHTR, chart of communications, okay? Someone could say we're in a downtrend. Well, sure, we're going lower, but we got a buy signal right here. So aren't we not supposed to buy when the trend is down? Well, the way we find out the true trend is with the PET-D. Now, sure, for all intents and purposes, we may be in a downtrend, but I'm not going to listen to some guy in a webinar tell me we're in a downtrend. I want to see what the market's telling me. So I apply the PET-D, and guess what? We are, because the bars are red. So what's the rule? In order to buy a strategy number 4 buy signal, the bar above the arrow needs to be colored or outlined green. And this one is not. So are we going to take this signal? Well, no, we're not, because the odds are against us that this will work out. And look what happened. So even though we didn't have a trade, you see how the dynamic duo helped us stay out of a lousy setup? Here's another one of those examples. Okay, we're in an uptrend, right? Okay, that's pretty good. We're in an uptrend, but strategy number 4 generated a sell signal. Well, maybe it's a valid sell signal. The only way to know is to apply the PET-D. And in order for us to take this, the sell signal, the sell bar below the arrow needs to be colored or outlined red. And what color is it? It's colored green. So in other words, the two methods are out of sync. The strategy is telling us it wants to go lower, but the color bar directional tool is telling us the market wants to go higher. So therefore, since they're out of sync, we're not going to take the trade. And that was a wise idea. And look what happened. So even though you didn't go long, you didn't lose anything, because that's half the battle right there. It's all about keeping your losses to a minimum. All right, sell signal in CTAS. All right, let's confirm it with the PET-D. And yes, it is confirmed. So let's say we took that trade. All right. And it went down for a day or so, but then it's kind of bouncing back up. The bars are still red, so I'm still in the trade. Okay, I've got a tight stop, but I'm all right. But then look what happens. It goes up, and now the bar is green. Well, this is not enough to tell us that the trend is changing. We need 3 or so bars of green to tell us that the trend is up. We've still got our stop in place, but we click on strategy number 4 just to check, and guess what? That's a buy signal now. So here's what we tell our students. It's up to you, but a lot of times it's better to what we call switch and reverse. In other words, you would have been short right here or sold, or maybe you bought the puts. Well, maybe it's time to exit and reverse, because the market changes its mind. It's like a river. Sometimes it's kind of going like a small pond, and then other times it's raging rapids. All right. So you've got to go with it. You can't expect it to change for you. So either you would exit with a small loss. Let's say in this point, it would have been, if using one of our standard stop losses, about 5 points you would have lost. Okay. But let's say you decided to get out and take a 5-point loss and then switch and reverse and go long. Well, look what happened. In the next 3 days, you could have potentially captured 30 points. That's enough to make back the 5 that you lost and then some. So this is the beauty of the dynamic duo. It's not that every signal, as I said, is going to be a perfect one. Sometimes it doesn't work, but it's consistent. And a consistent method is one that's able to recoup the losses. Here's an example of Moderna, okay? This was a couple of months ago. We've been heading up, and now we have a sell signal. Is this a valid dynamic duo sell signal? Well, we click on the PET-D, and yes, it is. The bar below the arrow is red. So we could have taken that, and look what happened. 40 points coming into last month. All right, let's look at this example of ANSS. This is a perfect range market, right? It's just kind of in this range. You don't want to do anything. But if we click on PET-D, we see, I should say strategy 4, we see we have 2 buy signals here. All right. Now, once we apply the PET-D, we see that the bars above are green, even though the bars before and after are red. That's okay. So we have 2 buy signals here. We could have taken either one, and look what happened. 60 points coming into April. The beauty is, once again, if you missed that, there were more signals being generated along the way. Now we can also look at and apply this to ETFs and different time frames. Here's a weekly chart of the QQQs going back to April of last year, a full year ago. Okay, a sell signal, strategy number 4 sell signal, was generated in the QQQs. That's the ETF that represents the NASDAQ. And so that looked like a pretty good sell signal, but we just want to validate it. We don't want to just jump in. So let's confirm with the PET-D. And yes, it was confirmed. You see, even though the bars prior to were green, all we need is for this bar to be red. So that was a sell signal. And look what happened in the following month. The QQQ fell 80 points. You could have potentially captured or used as a market directional tool, telling you what the market was going to do. And that represented thousands of points in the NASDAQ. Now, as it started to firm up, it started to go higher. So is it time to buy? Well, let's click on strategy number 4 again. Well, nope, it's generating 2 sell signals. Now, in order for us to take a sell signal, the bar below the red arrow needs to be colored red. And you can see here, the very first one was not. So we would not have taken that signal. But it generated another one, and this one was valid. And look what happened. So you could have potentially made 80 points to the downside in 2022, and then coming into 2023, another 52 points, just by applying these 2 simple edges that I've shared with you today. Okay, let's go over the process here in SGEN. All right, we see that we kind of have a sideways market. It's been going higher, but we don't really have any idea what's going on. This was just a couple of months ago. Click on strategy number 4. Click on signal arrow. And we have what we call a cluster of buy signals. All right, but this still isn't enough. We need to confirm it just to make sure the PET D is validating it. So we apply the PET D, click on the PET D, and see what the colors are. Yes, every bar above the green arrow is green. So look what happened. SEAGEN Seagen Inc. up 12% to 159.18 after earnings beat. So there's great news, fundamental news. We reported the earnings review today, and the earnings rose 60% year over year. And it's great news, okay? So right now, everyone's saying, gosh, that's amazing. That's why I want to buy. But isn't it funny, if we look at the chart, well in advance, strategy number 4 and the PET D were telling us to buy well before that news came out, okay? Now, you could have either sold and taken your nice quick profit there or held on, because look what happened. The stock went up potentially 70 points in 2 months based off buyout news. So how did we know in advance? Because once again, the market tells you just about everything you need to know in advance. There's absolutely no reason to be looking at news or trying to figure out earnings or buyout estimates or things of that nature. They're just too subjective, and there's too much hard work, in my opinion. I used to do that stuff for hours every day and on the weekends. And I got to the point where I had analysis paralysis. There was so much information. I was more confused afterwards than I was before I even started doing the research. It's so much easier when you learn how to listen to the market and you say, wow, I don't have to worry about earnings anymore. There's no need to. I don't have to worry about buyout rumors. I don't have to worry about what that guy's saying in chat room. I can just listen to the market, and it's so simple, and I have higher consistency than I did before. That's what turned my trading around. Okay, let's recap what we shared with you today. Strategy number 4, the first of these 2 edges. Remember, it's a unique strategy based on a pattern that repeats itself over and over again. I have been using and applying this method for the past 4 decades in my own personal trading. And it's a great, very consistent method. But every once in a while, there will be some losses. So how can we filter that in? Well, we use the PET D. This is the color bar tool that paints the bars either green or red. So what we want to do is apply these 2 high probability edges for telling us what the market is going to do. Once we apply them together, we get what we call our dynamic duo. That means we'll only take a buy signal if the bar above it is colored green by the PET D. We'll only take the sell signal if the bar below the arrow is colored red by the PET D. It's that simple, but you've just seen how you can change your trading to really getting these high probability setups. And then lastly, everything displayed was coming from the PTS Primo Charting Platform, where everything is 1 click away. We made it this way. I developed it with Pro Trader Strategies to make trading simple. So ask yourself, do you think these 2 edges can help your trading in 2023? If you're struggling, if you're nowhere near where you thought you'd be in April at the very beginning of this year, I think this is a great way to get your trading back on track. So because of that, we have a great discount and a great special attendee discount for everyone in today's webinar. All right, we have our dynamic duo special. This is strategy number 4, along with the PET D tool. You're going to get instant course access, detailed instruction. Now, we'll teach you all the different places to enter, to exit, and to place your stops, because we know that everyone has different risk parameters. Everyone has a different approach to trading the market. So we give you all these different variables for you to choose from, all right? You'll also get the automatic buy and sell arrows. You'll get the entire course rules. And along with the Pet D course, you'll also get 4 separate Pet D trading techniques that you can use on your own without applying strategy number 4. Now, on top of that, we're going to throw in a full year of the PTS Primo Charting Platform because we want it to be easy for you. Even though we can apply strategy 4 on different platforms like NinjaTrader, Thinkorswim, Metastock, Sierra Charts, it's so much simpler on our platform. We designed it and developed it that way. So what we want to do is throw in a full year. Now, normally that would cost you close to $1,800. We're going to throw in the full year absolutely free. All right. So included with this, you'll get a full year of the platform. Now, with the platform, you're not just going to get, strategy number 4 in the Pet D. It also comes with a host of different techniques and tips and strategies that I've accumulated in my 46 years that you won't find anywhere else. We also include a signal scanner where you can scan for these setups on a nightly basis, auto-generated exit levels, a strength of trend tool that will have an uncanny ability to tell you when a trend is running out of steam, okay? Also, over 90 technical indicators that you can use to apply to your methods, as well as personalized tech supports. And that's just the tip of the iceberg. There's just so much more included with the platform that you're getting for a full year free. Now, I know a lot of traders will say, well, Steve, you just showed us a lot of stocks. I don't really trade stocks, or I do very sparsely. I mainly trade other markets, other time frames. Well, let me show you some examples. Here's a 4-hour chart of the Canadian dollar, okay? This was just last week, 4-hour chart. Once again, strategy 4 generated 2 signals, a buy signal here and a sell signal here. Which one are we going to take based off what I taught you today? Obviously, we're going to take the sell signal. Why? Because a buy signal, the bar above the arrow needs to be colored green. And what color is it? It's red. So we're not going to take that, and we'll go short the Canadian dollar. And look what happened. In the next day, could have potentially captured 150 pips. That's close to $1,500 per unit, okay? And another signal was generated here if you missed that one. All right, that's one market. How about a weekly chart of gold? Same concept applies. Just because we changed market or changed time frame, nothing changes. We have 2 buy signals that were generated. They're both colored green by the Pet D. This was in March last month. And look what happened. Went up 190 points. A lot of people have been saying, well, yeah, gold's going up because of what's going on around the world and what's going on economically. Well, it's funny how this is not based on any of that. This is based on a pattern. And this, before that big rise in gold, we had 2 buy signals generated. Let's look at a 5-minute chart of the spiders. Let's say you're an intraday trader. Okay, this is just on the 13th of April, just last week. All right, so we have a 5-minute chart. All the bars are green. We have a buy signal, so this is a valid buy setup. This was roughly about 7:30, 8 a.m. Pacific time on the 13th. And look what happened after that. A number more signals were generated all the way up. There was only one non-valid setup right here where you had a buy signal, and it was colored red. But you could have easily gotten back here, and you had a number of signals all the way up. Close to 5 points you could have made in one day just trading the 5-minute spiders. All right, so let's break it down. Our dynamic duo combo plus 12 months of the PTS Primo Charting Platform. This is a great way to become acquainted with us, to get to know our way and philosophy of trading, and also to really get in on the ground floor and what we feel is one of our best and most consistent packages. That's the dynamic duo trading package. Now, let's break it down. Strategy 4 would normally cost you close to $700 if you purchased it separately. If you purchase the Pet D separately, it will cost you close to $5,000. And as we said earlier, if you bought the PTS Primo Charting Platform for a year, it cost you close to $1,800. So altogether, without this special we're offering today, we're going to be talking close to $7,500. All right, this is a large amount of money. We don't expect people to pay that, especially people who are new to our teaching and new to our products. So we don't want to charge you close to that much. I know some websites do. So here's what we're going to do. We're going to slash that tremendously. And for a limited time, we're going to offer you a one-time payment of $497, less than $500. You can get all of this. Strategy 4, the Pet D, and a full year of the platform, and then just establish a $97 monthly payment with Pro Trader Strategies. That's it. So for less than $500, you can be up and running as early as today. Okay. Now, I know a lot of students say, hey, Steve, listen, I don't want a monthly payment. I'm sold. I want to buy it all together. You'll still get a 33% discount. If you pay in full, it won't cost you $7,500 or close to. It'll cost you $49.95. Okay. So you have two different options. You can pay in full for $49.95, get the 33% discount, or the really deep discount of only paying a one-time payment of $497 and then just $97 per month. Okay, it's up to you. Both are great, and both come, once again, with a full year of the platform. Invest in yourself. I know we're all taught to invest in trying to find the best bargains, the best leads, but we never take the time to invest in the most important thing, which is ourselves. Take your trading to the next level with a dynamic duo. I use this every day. I used it this morning. Even I was intraday trading E-mini futures. I use this. Okay. It's a great, great method. And I really feel if you're having trouble, this will get your trading back on track. Here's how to take advantage of this great, great offer. Contact my sister site, Pro Trader Strategies. I would suggest giving them a call at area code 310-598-6677. To have trading consultants that would be happy to answer any question you have concerning price. They can take your order over the phone if you're ready to, but even so, there's no obligation. They would be giving you a quote, and then you could just decide and think about it for a while and then decide on your own. But any questions you have concerning data or concerning more information about the platform, they would be more than happy to answer for you, once again, without any obligation. Now, if you look, the link you see at the very bottom, you'd have to copy and paste that link. It's not a live link, but copy and paste it onto a browser, and you can go to the info page and you can sign up there as well. But we've posted a live link on the chat box, so you don't have to do that if you don't want to. Just open up your chat box, go to the icon there, and you'll see the link there, and you can click that on. Okay. Now, I promised you I would answer any questions. We have about 10 or 15 more minutes left. If you have any questions regarding what I just went over, please feel free to ask right now, and I'll answer them to the best of my ability. Someone says, this is our most common question here. What is correspondence, educational correspondence? Educational correspondence, if you let me back up here, I'll show you. They're asking about this. Educational correspondence right here. A lot of students will say, what does that mean, educational correspondence? What that means is that you can correspond with me anytime you'd like. Okay, there we go. Anytime you like via email. Any student of mine gets my personal email address where you can contact me whenever you'd like. So it can be over the weekend, prior to the market opening, after the market closes. It makes no difference, and I'll get back to you usually within the next day or so. And so if you have a question about the Pet D, if you want me to look over a trade, or if you just have a question, anything, something isn't making sense to you, don't hesitate. And this is not for a limited time only. As long as you're a student, you can always ask me questions, okay? So this is what we mean by educational correspondence. It's the next best thing to having me sit next to you, because I'm available at all times, just about all times. I live, eat, and sleep for my students, okay? Any other questions while we have me here, okay? Can this work on futures? Yeah, I don't know if you heard me before, but yes, I don't have any futures examples here. But yes, I used it this morning on the futures. I was looking at a 1-minute chart this morning, and there were a lot of nice setups, and I had a couple of quick trades. And so I believe I had 2 break-even trades and 2 winners. And that's, like I said, how simple it can be. So it's really a versatile dynamic duo method. It's simple, but it really will take your trading to the next level. That's why we feel if you're having difficulty with what you're trading with right now, or if you're struggling, this is a great way to become acquainted with us. This is a great way to get started in the right direction, okay? And plus, on top of that, I can't think of a better offer, because usually when we show our offers of different methods and different techniques, we discount them, but they're in the $1,000 range. This is a great offer for less than $500. You can be up and running as early as today, and you can be watching, the info about the actual trading strategy and learning this afternoon. So I would really think about it. And remember, once again, there's absolutely no obligation, but if you're at all interested, do not hesitate to contact Pro Trader Strategies. They would be more than happy to give you a quote. Another question, does strategy number 4 ever generate buy arrows that are below the 50-period simple moving average? No, good question, but no, it won't, because remember, even though this is not foolproof, even though the buy-sell line or the 50-period moving average is not guaranteed or written in stone, we're just trying to elevate your odds for consistency. And that I asked my mentors the same thing when they taught me this concept. They said, it's not that you won't have some very good setups below the 50-period moving average, but it's just about consistency, because over time, if you buy below the 50-period moving average, you'll most likely give everything back. So sure, like the slot machines in Vegas, you may get a couple of good winners here every now and then, and the bells and whistles will go off. But if you continue to do that over time, you'll most likely end up the way most people do at the slot machines, giving all their money back. And that's the way it is when you buy below the 50 or sell to go short above the 50. So for that reason, we will not have a strategy for buy signal below the 50-period moving average. Great question, okay? I hope that explains it. Remember, it's all about consistency. We're not here trying to tell you that this works 100% of the time. We're just trying to put the odds in your favor. And if you buy below the 50, ultimately, you're most likely going to give it all back. All right. Now, if you don't believe me, and I ask you not to believe me, go back and look at your last 10, 20 trades. I can almost guarantee you that the losses were due to the fact that you were buying below the 50 and selling above the 50. Okay. So go back and do your research. Most likely, you were out of sync with this simple but very powerful rule. Good questions. Any more while you have me here? Remember, this is a limited time offer. Next week, we'll be talking about something entirely different. So if you're at all interested, sure, watch the video this afternoon, but don't take more than 3 or 4 days to think about it, because most likely this offer will be gone, and we'll be hating for you to spend $7,400, $7,500 when you could have purchased it for a fraction of that, okay? Okay, as we conclude, I just want to thank you so much for attending today. I hope you saw how simple and powerful the dynamic duo edges are and how they can really help your trading, and how I use them on my trading on a daily basis. But most importantly, we really hope that you become a student of mine and take your trading to the next level in the strategy number 4 dynamic duo course. Thank you so much for attending. I wish you all the best of luck and hope to see you in class. Bye-bye. Have a great day, and I'll see you next time.